In this video, I'm going to show you what live trade I'm in, how I get my entries, and am I going to get liquidated in this trade? So let's jump into it. BTC, I always start off my main analysis with BTC. The reason why, we know that BTC brings all the hype and it filters down into all of the other altcoins. So your main analysis should always be off of BTC. So what did I see in order to get into this bearish type of market down here and capitalize on an altcoin that will show you being short? So as we can see here, we've come from quite a bullish uptrend from around about the 1st of June, and we get a news catalyst, I believe that sent Bitcoin starting to come down to the downside. So two reasons are: one, stochastics crossing over in an overbought market, and we also get price actually closing and trading down below a moving average. Now, what this doesn't do, what most people try and do, is most people try and catch these shorts up here. They'll try and get themselves into positions up on these top bits up here. And where that can be great for returns, there's a lot of times where you could be wrong. So capturing that, taken out, look, moved quite high. Capturing that, yeah, you can capture this, but you're not capturing the overall move. Okay, so the understanding is that you're capturing the meteor part, which is all of this. This is where you're trying to get your entries, and you're capturing the meteor part of the trade. Okay, you don't need to be so precise with your entries. You give yourself enough capital in your account to average into your entries, and you catch the main move of the trades. So now we know why I was short on BTC from just a technical side. I will now go into the altcoin, if I can find it, that also correlated very nicely with this BTC sell-off. So as we can see here, we are in a similar move that Bitcoin was in. So we were trading above the moving average, we get the news catalyst that sends it down, and then we start trading below this moving average. Not only that, that's one confluence. The second confluence is that we have a moving average crossover in the overbought areas. Now I'm still testing with the overbought and the oversold areas, as well as not trading with inside these rangy parts. But this is still in testing at this moment in time. So what was the actual trade? The actual trade came when we got this closing below the 200 EMA, and in here correlates with a crossover. So what we do is we take our position and we ride the trade. Okay, so look at how long you'd be riding the trade. You barely took any drawdown and you're riding the trade. So if you caught this all the way down to where price is actually right now, let's be conservative, that's a 30% move. Okay, let's say you're on a 10x leverage, that's a 300% gain in 9 days. That is crazy, okay? That pays off not having to be so precise at these top bits. Once again, on Bitcoin, you can get taken out very easily, okay? Trying to predict this top, trying to predict this top, trying to predict this top, you just get liquidated, okay? So you want to stay on the right side of the market if you can help it, and try and formulate a strategy around trend following, especially for the cryptos. Now, let's go on to my actual live trade. So the live trade I'm in right now is InGen. Okay, so this is a difficult one because we just spiked above the 200 moving average, and we also got a stochastic crossover. So that gives me the two confluences that we are trying to turn bullish. Not only that, but we're pairing with BTC, as you can see here, the crossover and price above the 200 moving average. However, we did sink back down, and now we're trading once again below the 200 moving average. Okay, so that's the BTC outlook. We were looking for bullishness because we were in a consolidation coming from a downtrend into a consolidation. We did get a spike out, and you would have liked to see a bounce and carry on trading. However, that is not the reality that we're dealing with, and price decided to continue falling down. So what does that mean for my trade that I'm currently in right now? So as you can see here on the right hand side, my first buy was here. Okay, literally right at the top. So I got into a long right at the top. However, I gave myself enough capital in the account to give myself average ins, so DCAs. So price came right back down to my second buy, as we see here. So now I have 2 buys in. The second buy is currently at break even. The first buy is currently down around about 10%. Okay. However, as you're averaging in, your initial buy up here is no longer, this is no longer where your price of your average entry is. Your average entry gets lowered down. So now I only need less of a pump to make more money than if I just stayed with my initial entry in the trade. Okay. So that is the great thing about DCA. Now, what happens? What happens if price decides to continue going down? Well, as I said, I gave myself enough capital in the account. I know what my data is in regards to my trading strategy. So I have 1 buy in, I have 2 buys in, I have a 3rd buy ready, I have enough capital for a 4th and a 5th. So what does that mean in general? We could take a huge drawdown, but as we're entering in, this average price right here, the green line, as we keep on entering in further and further below, our green line, our average entry will keep on getting further and further. So when we do eventually get that push up, we will be making money. Now, what I do want to point out that there is a chance that I get completely liquidated. If this just decided to just continue, and the protocol goes dead, and it just continues and continues and continues without even giving me a bounce, then I will get liquidated. If there's no bounce and it just continues to go, and doesn't give me a bounce, I will get liquidated. But that is the game you play. When you're trying to turn small money into big money, that is the game you play. However, I will now go into the reasonings why this works so well. So it's a form of compounding. So the definition of compounding is right here. Everyone knows compounding is a financial phenomenon that makes time work in your favor. So what it normally does is your earnings are added back into your principal, which then give you a larger base to play with. Okay. So a very good example is Larry Williams right here. My friend on X, go and follow him. He puts out a lot of good threads about expert traders and the reality of trading. But there was a couple of bits in here that I wanted to show you about. Here we are. There are many ways to go about this problem. And this is the money management problem, the keys to the kingdom. So that means that they will increase their number of units or contracts or shares or positions to make more money as your money increases. However, as your money decreases, you will lower. So as your initial, when you start losing money, you will start to decrease your positions. This is very easy saying it, but very hard to actually implement. This is the essence of the sweet science of the correct marshalling of your funds. This is the basic truth that can be worked in several ways. Now, as Larry Williams said, there's a lot of examples on how to do this. A lot of you have probably seen that in the crypto space, meme coins have been trending quite a lot, and you see people turning $100 into thousands of dollars on just trading meme coins. Now, the principle is still the same. Yes, they are meme coins. Yes, it's slightly gambling, of course. However, the principle stays the same. You will see people turning $100 into thousands and millions of dollars. The principle is that when they are winning, they increase their positions. So they'll go on, as you can see, let's say, for example, Land Wolf. Now, obviously, they might catch a trend, they're bag holders, etc., but the principle stays the same. You're trading Land Wolf. You 2x your money on Land Wolf. You take out, you sold. You've gone in with 1 SOL, for example. You've made 1 SOL. You take it out. You've now got 2 SOL. Then you see another one, Mother Iggy. You go in with 2 SOL. You bring 2 SOL out. So you're compounding your account, okay? Now, I want to show you that this obviously is very risky, but it's the best way to make money in trading. And I believe it's one of the least talked about ways of making money in trading. The most safest way you can do this is loading up your accounts very conservatively. Okay, so here we have $100 account. And let's say that you have a strategy that gives you 5%, five times drawdown that you've seen. You've done your back testing. You've seen that you need around about 5 entries in order to get a pump before actually taking profit. Okay, so we split our account into 5 entries. Okay, so we have 20 quid, 20 quid, 20 quid, 20 quid, 20 quid. Okay, so this is every entry. So your 20 quid will be your first entry, 20 quid second, third, fourth, fifth. Okay, let's be conservative and say that you only got 2 entries before price gave you a pump to the upside or to the downside, depending on if you're in a long or short. So you're only in with 40 quid here. Let's say price gave you a 10% move in price, but you're in with 10x leverage. Therefore, it has turned to 100% gain. But that's not 100% gain on your 100 quid. That's only 100% gain on the money that you put in. So the 2 20s, 40 quid. So you've made 40 quid. So from this 100 quid, you now have 140 quid. Okay, very simple. Now with the 140 quid, you don't start de-risking. You start increasing your risk. However, you still have your 5 entries here. Okay, 1, 2, 3, 4, 5. It's just every entry now is slightly bigger. So it's 8 quid bigger, $8 bigger, €8 bigger, whatever it may be for you. So now the 2 of these combined is your entry. So now that is $56 into a trade. Once again, price moves 10%, but you're on 10x leverage. So you've now made 56 quid from that 140. So now the 56 gets put into the 140, and now you're left with 196. The same thing applies. Bam, 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 bam. And see how the compounding takes place. So from 100 quid started, compounding, again, and again. Starting at a low number obviously takes a little bit longer. However, if you only have $100, which most of you probably do, to start trading with, you can use this approach. Now, it only takes 1 to get to there, 2 to get to there, 3 to get to there. Where are we now? 3, 4, 5, 6. And then your last trade, bang. So you only need 6 to 7 trades to make your $100 turn into $1,000. And that's what a lot of these people are doing, just on bigger accounts. Of course, they're in it for longer. The upside is crazy on these meme coins, but the principle stays the same. Now think about this when you start getting into 8th, 9th, 10th, it's exponential. That is the power of compounding. Now, I also do post a lot of things on X regarding this. With Bitcoin, I see real world usages, your buy and sells, how to pick altcoins, etc., etc. If you have any questions regarding this or regarding my live trades, let's see what this live trade is doing at the moment. We're getting a nice push for my second entry right here. That's pretty nice. Do want to see it start to rally from here, which would be nice. However, only time will tell. But if you have any questions regarding this, or if you want me to analyze any pairs or any cryptos that you have, or what type of conditions we're in right now, go over to my X. I'll put the link in the description so you can easily click on it there, and you just give me a DM.